Hey, good afternoon, everybody. Doc Severson here with 12-Minute Trading. I'm joined by Dave Lukas of 12-Minute Trading as well, too. Today's Monday, the 17th of March, and we have a little bit of a rally as we get into the next quarter contract of the S&P. So, nice little move. We got our 10% correction. We're going to find out in the next week or two here as to whether or not this is going to set up the next leg down, or perhaps we're going to V-bottom. Who knows, Dave? What are you thinking?
Typical, if you look at seasonality, the back half of March is good. We talked about it last week. I thought there'd be a rally coming off this. It may not put in a higher high. It's probably more likely to put in a lower high, but back half of the month, end of the quarter, the big boys got to get some window dressing and show some profit. So don't be surprised to see this thing run, over the next couple weeks, back up maybe to I don't know. Like I said, I don't know if we'll get to a new high, but I wouldn't be surprised to see 6,000 on the S&P challenged again, 21,000 on the NDX on the Nasdaq, and we'll see. But we also could just this could be it. We could roll over from here. I think the Fed's going to have a big part of that this week. I think there's a lot of room for the Fed to be more dovish now and signal that they can cut rates, maybe multiple times this year. The market will love that. I think that's part of what we're seeing running up into the Fed a little bit because, you saw retail sales was down today. The data, like bad news is good news, right? So we're all back into, hey, things are weakening, all that stuff. And then we've also got inflation that's come down. So why is the Fed keeping rates, above where quote unquote inflation's at this point, right? And so the pressure from the market seems to be it's time, and we'll see how they react. But last time Powell spoke, he was a little bit more dovish. So we'll see what happens on this Wednesday. But I'm betting he's, comes out a little bit more dovish, gives the market what it wants, and we get more rallying, and then April 2nd again, all bets are off. So we got like from now to April 2nd, right? To make some money and then maybe go risk off and around that April 2nd time frame.
It's interesting today is like the Mag 7 is not really contributing that much. In fact, and Nvidia's
No.
down, Apple's barely up at all. We
Tesla's down.
this is
Last I looked.
Microsoft is only up 1%. I mean, this is a very broad-based rally, but
Yeah.
it's not the Mag 7 driving this. So that's I think that's at least encouraging. The Nasdaq is 94 advancers, 7 decliners, and it's
Yeah.
being led actually by a lot of the chip stocks. So that could be the
Well,
next.
and the interesting thing is we didn't really take off until after 1 o'clock today, and I was looking for, some news and stuff that really would have juiced it. And the only news that I've, really seen today that was maybe significant is that, Trump's talking to Putin tomorrow and peace with it is really close. They're at the, kind of the finish line almost. That's one thing I just don't know if that does it for the market, but I thought it might be some trade talk or something, but we'll have to see. But there wasn't anything big unless it's just not released yet and the market sniffed it out.
All right, I'm gonna just frame the today's discussion with a quick chart of the S&P 500 here. So what we've been talking about the last couple of weeks is like, okay, here we go. We're starting to the downside. Is this going to be a pullback at the trend line? No, it's not. Is this going to be a pullback at the 200-day moving average? No, it's not. And it kept on going. This yellow line here is the 10% correction. And we actually closed below there. A lot of times I'll see the market take off once it touches 10% and just rip from there. This time it did not. So that's that Thursday. Last Thursday was a particularly dreadful day as it closed near the lows of the day and it actually undercut and closed below 10%. So, good on that.
Mhm.
Now we've obviously we've rallied about 200 points off of the lows in the last 2.5 days, and so from there, well, I guess it's only 2 days because we did close near the lows of
Yeah.
that. So
Yeah.
it's only Friday and Monday.
And you
Is
can
this
see like 61.8 retracement is what, 5,900 or so
right at
on this thing?
5,900? Almost exactly. So we got a couple of targets here. First of all, The normal retracement targets is 38.2. That's the first obstacle. And that's coming into play around the 200-day moving average. So former support becomes new resistance. This could
Mhm.
be this could be maybe by later today or tomorrow, it may find a dead stop right there. We may do some retracement to set up the higher low and then take off from there. So if it's meant to go higher, we might have a little deep fake going on here. 50%
Mhm.
comes in at 58.24, and then here is our ultimate target for this reaction by the end of March is going to be about 5,900. So we got 2 weeks to get there. That's a pretty easy short squeeze to the upside. And then after that point, if we do make it up to 5,900, everybody's going to be bullish by that point. And then one of two things I think will happen here. Either we're going to do a high and tight flag, which would be bullish, or what we're going to see is a much looser formation, which is going to do something like this. It's going to set up maybe like a double top, and that would probably point to the downside if we do that. If we get really sloppy around 5,900, then that probably points to at least a rejection at the beginning there, and then who knows what happens after that.
And that's your lower high, exactly. And then if it's gonna roll over. So think about it this way, guys. You think of it like, okay, I'm gonna run this thing up into the end of the quarter, kind of close out the quarter with some gains. April 2nd is right after that. So you've got, a day of reprieve, and then April 2nd, all the reciprocal tariffs go into effect. And again, you're right back into it. What's the certainty? What's going to happen? Who knows, right? So that's where the market, is going to probably be in a state of flux again, unless, and this is what really we have to watch over the next couple of weeks. If these countries, European Union, all these countries start coming out going, okay, we're lowering our tariffs, we're lowering our tariffs, we're lowering our tariffs ahead of the reciprocal, the market's going to love that. Because if you get tariffs down, right, and it's like, oh, 2% goes in on April 2nd, market doesn't care about that. It's the reciprocal 25% and all that stuff, right? So it's gonna be like a poker game until that to see who bluffs, right? So you're probably gonna have some that I think I saw European Union or one, somebody over there is doing like 50% tariffs they're going to add on US whiskey. And Trump's like, okay, we'll do 200% tariffs on wines and champagne and all that stuff. Right. Now that hasn't really happened yet, but again, it's like, who's going to bluff first? And frankly, I don't think Trump is going to bluff. He doesn't have to. The US, again, people have to sell, and the world needs to sell here. That's why we have such a big trade imbalance. We import a lot more than we export, right?
Right.
So the while I'm not discounting that if tariffs are put on things, and uh, there is uh, that kind of thing happening on American producers, like additional 25% tariffs and all that stuff come in. That's going to have some effect, on those businesses specifically. As an overall GDP and economic effect, is it going to be enough to give us a negative GDP and stuff? No. Tariffs by nature actually aren't inflationary. Don't believe what you hear from the news and stuff. Historically, they're not, because they actually cause prices to have to come down some. But that's the thing, is like, who's going to blink? Now we just saw Canada blink, right? That the tough guy in Ontario was going to do all the taxes and the tariffs on electricity in the U.S., and that lasted for about an hour. So we'll see if the rest of the world, who blinks first and starts to come down. But I have to imagine we'll get some of that, parity going into the second, and then reciprocal tariffs go on, but they'll probably be lower. But if we start seeing again, countries dropping tariffs ahead of that, I think the market will like that, and that may boost us and let us start to get back to maybe new highs again. But if that doesn't happen, then you're probably going to have that 5,900 to 6,000 range, maybe a really tough get to stay there and hold it, for at least the first pass. So,
For the past year and a half, we've gone through some. This has by far been the deepest correction that we've had. So
it's the
this
fifth fastest 10% correction in record.
Right.
We're going all the way back in the 50s.
So
So
the oscillators that I follow showed this correction to be as violent as the COVID one. So even though the
mhm,
COVID one was, what, 35% or
deeper.
something like that, it was
Yeah.
certainly deeper and it lasted longer. But this one had all of the vertical violence of the COVID move. And
Yeah.
so, it started getting to the point where I'm like, okay, we are pulling back the bowstring really tight now at this point. So, almost without reason, this was entirely driven by uncertainty
Yep.
with very, very few fundamentals actually driving this one. So, we'll see if we
Yeah, the
recover. I mean,
fundamentals haven't changed.
no, they haven't.
That's the thing. It's like the fundamentals haven't changed at all, really at all.
Even
But
though
you know,
GDP is supposedly negative for this quarter, it's tracking
well, the
negative.
New York Fed came out today and they're expecting 2.8% plus GDP. So, like, I don't know. These, I don't know which one of these guys is right.
I would
So,
I would trust
you've got you got the Atlanta Fed like -2 and change. You got the New York +2 and change. So, like, we'll see.
the
You
Atlanta
know,
Fed's got a much better track record.
yeah. So. So we'll just have to see how that plays out because in how they calculate the numbers. I don't know if you've heard Lutnick out there talking about taking out.
No,
They shouldn't be counting government like employees and all that stuff. And so we'll see what happens. But
that's amazing. That's
yeah.
amazing. Hey guys, we're going to be here for another say 15 minutes or so. If you have any questions, if there's anything that you want us to take a look at, please let us know, and we will comply. We will take care of that. Dave, I'm going
Yeah,
to bring
I
up
mean,
your.
we can bring up the charts and show the energies across the board again. It looks like the daily energy is charged up and releasing and starting this release. Makes sense, 2 days up. We got Fed coming up, there's some positivity obviously in the market. So, this is looking a little bit like a daily chart release in the midst of that weekly release lower, but the weekly's getting to that point where it's into exhaustion. For where the weekly's been getting into exhaustion, at least as of late.
Actually, I thought we'd be in exhaustion today because we dropped off this big green candle here. That one
Mm,
dropped off today. And so we're left with just this sort of cluster up here. So that's as this cluster drops off and we're left with this, that should drive us down. But sometimes the
yeah.
market preemptively arrests itself when it's approaching exhaustion. I see that all
Well,
the time. But
yeah, it's stopped in this area a number of times over the years too. So this could just be where it turns around. This is just it. So, and as fast as we went down, I mean, you got a weekly swing in the span of like 14 days. 10%. That's you know, typical weekly swing is, getting 10% is a lot for a weekly swing. So it's not that surprising to me either.
yeah, see, here's an example. This is one thing that we've done over the past couple of years is that
14 day.
yeah, we've gone away from the 14-day. We've gone towards the 9 period for the energies just because it is a faster market now. The
Hmm.
market is it's when you have a market which has got so many external influences, you can go into exhaustion. This is the frustration I had back in 2022 is like when we were running at 14, we'd have these huge moves down and it would never crack the exhaustion level. And so I wanted to apply that. And once I got into the nines, then this was working out perfectly. So, I think it's going to be 9 from here on in, and unless the market starts, you can you can see the difference if you look at the monthly chart. Like, okay, we're no longer in your grandfather's market. We are, into this area. So
That is all that's $10 trillion in debt. That's
yeah,
what that is.
yeah, no kidding. So Dave, I'm going to bring up your favorite chart, and you can walk us through this one as soon as this
Sure.
one comes up. There we go. Coming up
And it's gonna
slowly.
be I think it'll be fairly obvious on it too.
Okay, so we're going to go out to the weekly. There we go. There's the weekly chart. And
Yep.
you're down.
And
You got the
so
weekly chart. you got a squeeze showing up, and then boom.
Yeah, and you look at that. We squeezed down, but then we got outside the lower Bollinger Band, right? And so what are we doing? We're snapping back into it,
Yeah.
and look at how convenient it is. Look where the moving average is on that. It's right there at what 59.51, which is what we just talked about from a target standpoint to see this thing come back to. And if you look naturally to see this thing retrace up to there, right, in the context of the Bollinger Bands and looking at the price on the screen, not a surprise, is it? Wouldn't be a surprise to see it, run back up right up there. That's still you got almost 200 and some points to go to get back to all-time highs, right?
So let's go back to this dude here. Yeah, this plays out perfectly because this is what you were talking about.
Hey, Peter's saying louder. I don't know why. Can everybody hear me okay? We checked our volume, right? I was turned up.
Who needs
Type it in.
to be louder? Who needs to be
Yeah.
louder?
Doc or me?
So here's the end of 21. And so this is what we're talking about here is that we drove down, the initial swing down was below the Bollinger Bands on the weekly chart. We popped back up to the center moving average. Next drive down. Okay, we need to know who needs to be louder. We need to know who needs to be louder. Give us a who.
Hoffman says we're both fine on his end. Peter, I don't know. Maybe it's computer setting, man. Maybe you just need to turn it up a little bit. Sorry.
But
sorry, Doc, go ahead.
Here's the thing, though, is like, to your point, we never were able to close that weekly candle above the center moving average.
It's that line when you cross it to the downside and can't retake it. That's as long as you can't retake it, you're still going to the downside. Look at before that. Look every time, right? And I've been saying this for as long as I remember on here. Look at the whole time. Look at bounced on the line, bounced on the line, bounced on the line, bounced on the line, bullish, bullish, bullish. Cross the line, right? Until you can really hold it and get back above it, you're still in that primary downtrend.
Yeah, no, this was just downright evil right in there.
It definitely teased you on that one.
Yeah, that was.
It did it again too. It didn't take long to do it again too, but
yeah, this is where we knew we were getting some positive divergence. And if you go back and check our archives, this is where we started getting bullish right in here because we started making higher highs, and then once we broke above 4,200, we said we're going long. And we, I think, made the most of that one. We had some fun in the fall time frame, but man, that was an incredible run. But nobody cares about yesterday. What do we do about today? That's what we're looking for right now. So we're playing this long. We've kind of overloaded on the put side, and we want to play this up, and we want to clear inventory as we get closer to 5,900. We want to take some inventory off. We want to be very, very nimble as we get up to 5,900 because quite honestly, neither Dave nor I know if this is going to break higher into new highs or are we going to go spelunking again or going down for the next.
Yeah. But I will say that if real certainty comes into this market, so let's say Canada-Mexico deal is worked out and set, no more tariff day-to-day stuff, right? Again, if we see a bunch of the European Union and stuff bring down tariffs ahead of the SEC, like if you get that certainty in this market and then they pass the tax, the tax bill and all that stuff, like I could easily see this market ripping, and turn and rip to the upside. And we've seen it before. You had on the chart back to that September, October timeframe a couple of years ago where we faked it and we hit the bottom right about like where we're at now and then off to the races, into the next 2 years or so, right? So, it looked like we were going right back into a downturn, passing through that moving average, hitting the lower weekly Bollinger Band, turned right around, and then went right back above it and held it and kept rocking. So, that is definitely a possibility.
Here's one thing that I will say for that. So what you're talking about is this area right in here. This is where I think the understanding of what market character means is so important. So what did we do when we broke above 4,200 here? All of a sudden we changed polarity back to an uptrend. Okay, so from a bear market, we took our first step to an uptrend. Okay, and we went into exhaustion, and so that was no surprise. But notice how gentle everything was. Notice how gentle everything was, and I'm
Yeah,
speaking more
not
to
like
the,
what we just saw.
yeah. So that was this is very very different, and I'm doing the same thing on Bitcoin right now because the movements that we're seeing, the consolidations and the corrective moves that we're seeing on Bitcoin are very much specific to bullish accumulation markets. They're not the initial move of distribution. This is an initial distribution move. So this is something to pay attention to. And this is something to respect and not just say, whoa, we're just going to buy the dip. Right? So
Yeah.
we're buying the dip, but for short term. And if we're able to see this consolidate and set up the next move, then we will leg in,
Get more
right?
aggressive.
We
Yeah.
will get more aggressive. But if we see a very very loose formation here at 5,900, what that means is that we're probably getting set up to go on the next leg down, which is again all that's going to be for you Elliott wave people is going to be an ABC correction, right? So this is A, B, C, and then we could be over with. It could be over with. We could do one of these things. I mean, I think in the Trump world, things are going to happen very, very quickly, one way or the other. There is no there is there's no like gray area in these markets. It's we're going to be very decisive about policy and how things move.
And if they truly are, I've said this and I'm going to say it again to you all. Follow everything that our Treasury Secretary Scott Bessent is saying. When you see
Yeah.
him have an interview, even if it's a minute clip or anything, listen very carefully to what he's saying because he is very explicitly saying that this economy, this government has been literally drunk on spending, and we don't have a revenue problem, we have a spending problem, and they are going to rein in the spending. Remember, Janet Yellen saddled us with what they did in addition to the spending that they were already doing, 101.8 trillion, 2 trillion in deficit spending. They had another 3 to 400 billion that they basically did very short-term debt with over the last 6 months of the year. Some are speculating to help with the election, blah blah blah, whatever. But the point is they added that on and they did it as very short-term debt because they could roll it over, they could keep rolling it over, right? Well, the problem is they've saddled that on top of everything now, and Bessent has to deal with that. And if you wonder why he keeps talking about pushing rates lower, the only rates lower that can get pushed lower without the Fed is the long end of the curve, the 10-year, right? So they want that 10-year lower. That 10-year to go lower, you need people to buy bonds to push that price or push that interest rate down. Remember, it's inverse, right? The more people that buy bonds and demand for bonds, the rates go down. And so you need more bonds bought to get those rates down because it's like $9 trillion that they have to refinance in the next 6 months. And they need to finance it at longer term. They can't just keep rolling it over short term. And so they're trying to get those rates down. And one way to do that is to scare people into bonds for safety, which means you panic the market, right? That's one way to do that. And so this worked a little bit, but the 10-year sitting at like 4.2. And I have to think they want to get it down in the threes before they refinance this stuff. So this definitely is not over yet. And I think that's that's something that we have to be careful of. Unless they find a way to really get those rates down without, something bigger, right? And maybe it is cutting spending drastically because that will bring rates down,
Yeah,
right?
right
Maybe
now
they
it's
actually get Congress to do that, right? We were talking about this before. Like Congress has to effectively pass a budget to spend 30% less. What are I'd love to see the betting odds on that. What are all the betting odds like that? What's the company that did all the stuff around the election and stuff?
poly
Poly market. I'd
Yeah.
love to see the betting odds and poly market of that. So So how do they do it? Tariffs raise revenue that they can use to pay down things. Uh, you know, the what Doge is doing is obviously having an impact, but it's still up to Congress to cut spending because you can cut all you want from the government, but if they just keep appropriating 7 trillion, 7 trillion, 7 trillion, the money's still getting printed.
Yeah.
Whether it's spent or not, it's getting printed. And that's inflationary. So it's a mess, man. It's a mess. I don't envy the job that these guys have to do to bring fiscal sanity back if we're really going to do it.
All right. Hey,
All
guys,
right.
are there any questions? Anybody want to, we don't want to, just monopolize
Yeah.
the entire time.
You
If you
you
guys have
mentioned the
any
Bitcoin
questions,
chart. You should bring that up and show them what you're seeing on the Bitcoin chart while we see if any questions come through.
well, I will do that. That sounds like a great idea. Okay, so here is our favorite Bitcoin, and this is on which exchange? This is Coinbase. So most people don't know this, but there is not one exchange which regulates Bitcoin. There's Coinbase, there's Bitstamp, there's Kraken, there's, I mean, each exchange it's got its own price. But that's the way that Sam Bankman-Fried earned his money, was arbitraging each against each other, especially against like Asia versus the U.S.
Mhm.
That's how he made all his money, and then we know what happened after that. So
Mhm.
here's what I'm seeing on Bitcoin is I'm seeing a really cool confluence here. I mean, this currently, obviously lower highs and lower lows, but when we start to zoom out on this, let's get rid of the volume here. If we do some fib retracements, this is where we start to see some massive confluence. So if I take this all the way back to the FTX crash to this area here, I'm seeing a great confluence about 73.5, which is the perfect swing test for the previous highs. So swing test, for those of you guys that don't know, you drive up to a resistance level, resistance, can't get through, boom, former resistance becomes new support on the way back down. So 73.5 is that level of resistance. Now, if I take this fib from a major fib down to a minor fib down here for the crash that we had on August 5th, look where the 61.8 retracement is. So 38.2, 61.8% retracement, right around the same area. 72, 73,000. So that to me represents the final stop on the way back down. I don't know if it's going to get there or not, but I don't expect this to drive to a higher high off of this low, this current low right now. I believe that we're going to have some more fun with this. I think this is only going to drive up to a lower high rollover again, and then we'll see where the final low. So I think we're within 2-3 weeks of finding the swing low of this, and then I think the institutional money will find its way back at that level again.
I'll say this: I started becoming a buyer again when we got in the low 90s and have been averaging in, ever since that. I just buy daily every single day, averaging in, these levels. So if it drops a little bit, cool. But I think I think what's his name? Tom Lee's right. He said 150 by the end of the year. I would not be surprised to see 150 in Bitcoin by the end of the year.
Tom Lee, I've been following Tom Lee since I got
Yeah.
involved in Bitcoin back in 2017,
Yep.
and he's always throwing out some huge numbers, and
Well, and Tom is like every dip. This is a buying opportunity of a
yeah,
generation.
Tom
So
Tom is
broken clock is right twice a day, as they
yeah.
say. But I wouldn't be surprised to see it. I just think with especially if we don't really get our fiscal house in order, I think Bitcoin ends up surging. I just do. I think it's gonna be really tough. I think we can slow things down, but I just don't think we can really reverse this trend, folks. That's just my personal opinion, but I mean, 37 trillion in debt, 100 trillion in unfunded liabilities. I mean, just for context, the universe is thought to be only 13 billion years old. I mean, we spend that like in 4 hours. So, like, I mean, so turning it around's a heck of a job if it can get done. So, and I don't think it's a 4-year deal. I think it's a 10-year deal if you're going to do it. So, we will see if we are strong enough as a people to go through what it takes to do that right. So
We'll see. We'll see.
mm.
All right, everybody. Well, thank you for joining us here on our little Monday soliloquy, and we'll do this again next week, and hopefully we have some interesting clarity that comes back to the market after the Fed.
Yeah, watch those levels, guys. Look for the Fed to be maybe a little bit dovish, and see if we get this kind of short-term rally and in those key levels, and play it for that. But a little bit short-term right now. Going long is a little harder. So
Yeah.
just kind of figure out what that means for you and take advantage.
Be very nimble. Thanks, everybody. We'll see you next week. Take care.
Bye, guys.